What's up everyone, Tom here with another video. In this video we'll be discussing the latest stock market news along with our thoughts and technical analysis on the S&P 500, Nasdaq, put call ratios, Tesla, Bitcoin and dollar index. It's been some interesting moves and we've already seen some very interesting fireworks happening with these earnings reports. What happens next in the stock market? I'm pumped to talk to you about it right now. Stay tuned. Okay, so as we like to do on this channel, let's take a look at the last 24 hours to try to get an insight into what might be happening in the future. Overall, it was a mixed day yesterday. We did see, of course, Philip Morris not do so well. IBM's result ended up coming through to a 6.49% down day. And I think the most interesting thing is what happened to Snap after earnings. Snap was up about 24% after earnings, while Netflix did not do so well. Netflix definitely did fall off. So it's a mixed bag already from an earnings perspective. Snap, though, the standout right now. Will that work into Twitter and Facebook's favor? We saw, of course, movements into Facebook yesterday with a 2.36% up day. Across the markets overall, we're looking at a few things. Firstly, the start of the day was its normal up market. Now, this was a warning we saw in September, and some of you in the comment section down below mentioned this to me. Basically, we were seeing buying in the Asian session through the European session into the first couple of hours, and then we were seeing selling into the end of the day. And yesterday, we did have some buying hopes and then selling at the close. Now, we ended up higher, but overall, remember, the sell into the close is where the big boys are trading. That's where Wall Street is making the decisions to close those candles and to end up the day with a close and with the fight being done. And this has been bearish now since Friday last week, possibly even Thursday. Multiple days of closing lower than the opens in general. When we look at the sector analysis, I don't think there's too much that we can take out of yesterday other than the normal market, but we continue to look at this as it's an important thing over the long. So what happened in earnings this week so far? Well, we had Netflix, of course, announce not so well. Snap announced amazingly well that we just talked about, 24% up. Congratulations to people holding Snap. And now we've got Tesla. And Tesla ended up not very good. So basically, Tesla is selling off into the earnings. And that's showing me a little bit about retail sentiment. You or me or anybody else that's trading Tesla right now seems to be taking profits ahead of the earnings report. Are people getting concerned about the current valuation? I expect a high amount of volatility on that stock, and we will be looking at it throughout this video. Netflix subscription gains, of course, screeched a little bit lower, and we did see the stock fall 5%. It's in that channel. We spoke about the channel during our live session on Monday, and now we probably expect Netflix to drift lower to the bottom end of that channel. So definitely go and check that out if you haven't already. What about stimulus? Well, stimulus is the discussion point that everybody's talking about, but I think it's a mixture of stimulus and also this US election getting so close. Some of these polls have it very, very close. Some have it very far. We know that polling has generally been incorrect in previous Western economies. And overall, the stimulus seems to be the thing that most people are focusing on. Will they come to a deal? I don't know about that. Maybe it's going to be smaller than expected. But it is putting pressure on the US dollar. And we'll be taking a look at that in the charts in just a few moments, along with our S&P 500 analysis. So why are stock market investors starting to potentially change their focus? Well, because of this narrowing lead each way. I think that that's going to be the story in the lead up to the election. And it's why we've said for traders anyway, not investors, but for traders, maybe the shorter day trade or scalping sessions might be more in order. We're seeing the markets go up and down and all around kangaroo style, but we're not necessarily seeing a strong direction play just yet because these odds are just too close. Also, Google, what is going to happen with that post the election? Are we going to see a similar Microsoft scenario come back in? It's worthwhile staying in the loop on this story, as I think it could take effect if we do see one of the parties win by a majority and start to put pressure on big tech. So as we mentioned, put call ratios, it's one of the things that we look at a lot in the markets, and there's a few reasons why. S&P 500 put call ratios went down to 1.48 yesterday, which is a slight decrease on the day before. If we take a look at put call ratios, thank you very much, by the way, for the community to send this one through. And we have here PCC in TradingView. You can put it up on your charts. And this is put call ratios, and you can put some moving averages on it and of course smooth it out. Now, put call ratios generally give us a bit of an idea about where Wall Street is potentially going to focus or trick people in the market against each other. You'll notice I have a line across here at 0.6. So this is where puts effectively become less likely in the market and everyone thinks everything's all good. A lot of call openings. Now, if we superimpose that with the S&P 500, this red line up here, what you might notice straight away is that when the put call ratio gets down to this support line, often the market will be reaching a nice peak or an all-time high. We also saw just recently the put call ratio get down, and we mentioned this, that when the puts start to come out of the market and more people get bullish, it's often that kind of sync up effect where you can think, wow, it's time for us to potentially short. And that's where you want to actually be. You want to be contrarian thinking. And this particular indicator always helps us do that type of thing. But I wanted to mention that we are seeing a few interesting points here on put call ratios. Put call ratios are actually dropping right now. So the market is dropping, but so are the puts. People are still putting on a decent amount of bullish moves. We're seeing a movement down here. That generally has spoken to the idea of course, further corrective phase crashes. And when we look at the technicals, we'll see why. There's a very heavy level of support that we're right on now. And if stimulus talks don't come through before the election, we may see the market get through and below those points. And this is why I think this is a great chart for you to have on and always view, or of course, come and view our daily videos on the market. Volatility index, another favorite of course, people looking for bearish scenarios or bullish scenarios. We're still stuck between this 30 and this 25 level. These are the important points. Now, a few people have said in the community, what if we spike out through here? Often we already see the market react to the spike before it happens. I think the thing is, yes, the VIX is very, very fast. If it gets through this point and we see it start to move up, it's going to be one of those things that you need to be on the smaller time frames, grabbing it if you're going to trade the VIX itself. But remember, it's more the idea of if it gets through this point, what's happening to the market itself, what's happening to the Nasdaq, what's happening to the S&P 500. When you go to those charts, they'll be breaking through key supports, and that's your trade. That's the confirmation that you need to continue on. Remember, the markets will generally gravitate to the next level of support or the next level of resistance when they're moving up or down. Now on to dollar index. Well, we spoke about the pressure being put on by the stimulus plan. This is going to be a continuation thing. We probably will see weaker dollar throughout the next couple of years just due to the general printing on the US dollar as a whole. 93 getting tested right now on the markets, previous support. If it gets through here, where do we expect dollar to go? Most likely down to the 92.80, previous support zone over here. And anything under that 92.80, all of a sudden we could be going to 92. So some really big selling coming into the dollar is possible if these next two supports don't hold. There is a big gap in between this zone. Remember, we talk about fills all the time. When an area is broken and closed below on a significant time frame, the algorithms, Wall Street, retail participation like you and me, all of us get in and of course start to push it in that direction. And you want to be that smart money. You don't necessarily want to be pushing it through because we can't do that. But what you do want to be doing is grabbing onto the train and recognizing that it's going to go to that next zone or level. Dr. Copper is telling us that things are all good in the markets and the recovery is well underway. A few people again in the community have mentioned this as maybe not as great an indicator due to the amount that China is buying. But I think that overall, once you see the election happen in the US, whether the Democrats or Republicans win, there will be infrastructure spend. It will put pressure on copper, and copper still shows us a great sentiment indicator. And in this case, it's very bullish. A first time close above that 3.12. That's pretty bullish for copper. And next up, we probably expect a little bit of a decline back to 3.1, potentially test the resistance here, and then of course move up and through. Onto the general markets, what we're all here to talk about, the S&P 500, what's going on there. Here we've got the daily SPX, and remember SPX, the real market, that's the one we want to be using, guys. Always the real market whenever possible. Here we have RSI down the bottom, and I don't often talk about RSI, but I want to bring in some variety for everybody to show you my thoughts on it. So I've got this lock between a 70 and a 30 zone in TradingView, and that's just the standard, and I don't mind using that. Sometimes 60-40 is also good if you're thinking about using RSI. But I want to bring up an interesting point here. Notice when RSI gets above 70 on the daily SPX, again, daily SPX, it's very uncommon to do so. And it has usually provided us with a decent sell signal. So here, when it got above 70, it still went a little bit higher, but then it did sell off. We didn't quite get to that the other day on this point. But again, in buying pressure, if you put a line around this kind of 37 zone, you'll find that lines up with many buy opportunities as well. And if you can bring that together with price action, that's the way that I use indicators as a tool to augment the price action. The price action is the most important. So we're still testing the 20 exponential moving average here. There was a bit of a sell-off yesterday. And when we look at the futures contract, you can see what happened. The market came up, tested these two dynamic resistance levels. I hope a few of you got this kind of opportunity and then sold off back down to the 34 kind of 30 zone. And this has been a very strong support area in the markets. If we put the horizontal line up, we all know why. Previous resistances, beautiful closeout originally. This is going to be buying pressure. And as long as we're still in optimism around stimulus or whatever else, the market will try to hold this level. Remember, if the market gets through this level, we're going to have a 2050 cross to the downside. And at that point, you're looking at relative bearish intentions. We have not had a 2050 cross since October, or before October actually over here. And remember, last time it happened, significant selling pressure, significant buying pressure. We know that the 2050 exponential crosses mean something in this market right now. And we are at that critical point. For the bull case, we want to see it above 3480 to make a new high here, and then it will continue on most likely to 3500, and then after that point, obviously go test 3550. For the bearish case, close under this key zone between the 3430, 3420. If a close happens under there, I wouldn't be surprised to see further bearish movement. And we've talked about on the Nasdaq how that is probably going to be 200-point increments. So I think we'll stick with that for now, as the 11.6, the 11.4, and the 11.2 all could act as great support levels. And on the way up, the 11.8, just like yesterday, acted as resistance. And then, of course, the 12,000. So I still think 200-point increments on the Nasdaq makes a ton of sense moving forward. Continue to put those lines on and think about your trading and investing opportunities around those points. It does make some sense. So what about Bitcoin? Well, Bitcoin is amazing right now. 12,000. Congratulations, everybody. We got there. Pretty happy with that. I think that that was a great trade. We talked this one through over the last couple of weeks. It's been very bullish in the sentiment. Beautiful break above that 11,560. We spoke about that as well. But now we've hit the target and we've hit that psychological point for retail traders. If we take a look at the RSI, again, I'm using RSI here, above that 70 zone here on the RSI has generally been the end of the move. So let's have a look here. RSI got above and then it moved a little bit higher, but notice it still pulled back after hitting that psychological zone and gave you an opportunity to buy at a cheaper price than when it went through. Here's some people who argue, well, it went higher as well. Well, here's the close candle. We did get that kind of bullish sentiment where it went through and broke and closed above. And this often happens when it goes through a psychological zone like 10,000, but then it did eventually pull back and give the conservative opportunity. So I think that now that Bitcoin has hit 12,000, obviously if the dollar continues to drop, the US dollar, it will move through this zone, but we are getting into danger zone point here. The RSI is now above the 70, and usually we will have a retest. So we might see it break through the 12,000, move up, and then come back and test. That's an opportunity. But overall, that RSI has not been very wrong for that long recently. So that's why I look at indicators again. I go back through history and I say, well, if I did sell at that point or I got out, would it have been a detriment to my long-term trade? And I don't think that RSI has been too detrimental on Bitcoin as long as it's around key psychological points. I'd probably be putting a lot of focus on this one over here, because last time we got to a key psychological area, which we're at right now, 12,000. It broke through and then it moved quickly to the next key psychological zone. So remember, Bitcoin likes 500s and thousands. It's the way it trades. 12,000, very important. Watch the dollar index incredibly closely for clues on what Bitcoin might do next. So Tesla is sentiment in the market from retail trading crowd, and it has been bearish recently. Close now confirmed under the 20 exponential, and we have seen twice the 50 exponential moving average on the daily hold it up. So now that we've got earnings coming through, do we see selling into 400? It seems relatively likely unless the earnings are great. So 400 remains kind of the target. And if it gets down there, potentially there might be some bullish buying pressure. So if you enjoyed this video, please remember to subscribe and of course hit that alert button. Give us a big thumbs up and comment down below with other things that you want to see on this channel moving forward. I always take and appreciate your feedback down below. You guys are the best. See you in the next one. Bye for now.